I'm Shae Russell for mining.com.au, and for something different, joining me today is Philippa Leggat, the Managing Director of Critica, and Hedley Widdup, the Managing Director of Lion Selection Group. It is wonderful to have you both back on. How are you?
Hi, Shae. Lovely to be here.
Great, Shae. Yeah, great to be chatting to both of you. Thank you.
Thank you both for taking the time out to speak with me today. Now, Philippa, we're going to do a bit more of a deep dive into Critica later on, but Hedley, I want to start with you. And the reason I've got you on here today is I want to talk about why Lion Selection Group decided to take a stake in Critica.
So we want to try and achieve some diversity in commodities across the space, the resource sector space. We've got a fair bit of gold in, and gold is something which is reasonably dependable as far as developability and everything else. We've looked across the critical materials space. One of the best things that we thought is exposed to the energy transition and the future is rare earths. So we were looking for an investment in rare earths, but one of the things that we were cognizant of is that so many of them carry really difficult risks to overcome. So we were looking for three things. We were looking for size, first of all, because that's your best crack at having a strategic deposit, which will be one of the things that forces its way into the queue of supply in the future. Grade, if you could get it. Grade is fantastic because it covers a lot of costs and enables metallurgy and all sorts of other things. But what was really important was if we could find those three things, where is it in the world? We wanted it to be in Australia. And we were fairly early in our search when Critica, at the time called something different, was making a discovery in Western Australia. And this ticked so many boxes in terms of where it was, the grade and the size. I don't think there's anything like it in the market on those three metrics. There are various rare earth things in the market, but that's why we chose this one. In Western Australia, you don't have to worry about nationalisation. It's got sealed highways that take it to possibly one, maybe two process facilities, which will exist in the future. And it looks like it's big and it's definitely high grade. So it ticked a lot of boxes.
Philippa, Hedley's just pointed out some of the absolute strengths of the Jupiter project over in Western Australia. Tell me, can you explain a little bit more about the Jupiter project, just for everybody who's new to it?
Yeah, so West Australian clay-hosted project that is 2.5 hours east of the Port of Geraldton. As Hedley mentioned, on a bitumen highway, there is a gas pipeline running right along that road, and our licenses are on pastoral leases. So it's extremely easy to access, nice and flat and dry, and we've got access to all of the infrastructure that exists within that mining hub because it is already a mining hub. So you want a drilling contractor. There are a whole lot. We can get them cheaply because it is a competitive market for service providers, etc. Everything's at the doorstep. And then there are these two potential processing facilities which give us optionality. So you start talking about the commercialization potential going forwards. Then you look at the scale and the grade. And Hedley's right. Grade makes a huge difference. In terms of metallurgy, the thing that you need to do first with rare earths is increase the concentration grade, because the first step of any processing, hard rock, clays, what have you, is to produce a concentrate. And the more quickly you can upgrade the grade, the better off you are. We're already starting with a much higher grade than most clay-hosted projects. Our resource is in sitting with SRK, so I'm really looking forward to have some metrics to be able to talk about and calling it a deposit in future. I'm looking forward to that immensely. And then, of course, you've got the scale. Why does scale matter? If you look at any of these critical commodities that are so often traded in opaque markets, they're incredibly, incredibly complex to process. Rare earths have 17 different rare earths within them. You aren't just processing gold or copper with a couple of byproducts or things you have to get out the way as deleterious elements. You've got 17 commodities you're trying to separate out, and they are remarkably similar, which makes the processing decidedly more complex than it is in other areas. And so when the processors, the separation facilities, and then on from that, the producers, largely producing rare earths magnets, get material, their feedstock, however that looks, they want to know that they can get the same thing again and again and again and again for a long period of time, because it means that they can continue to produce a product without having to change the chemistry, because it makes their lives easier, it makes their customers happier. So the bigger the project is, the more consistently you can supply that product, the better chance you have at the end of the day at becoming a provider, a supplier to one of these off-takers. And that's important too if you're looking at a big partner, strategic partners coming in along the way. Those are all the same things they're going to be looking for, same as Hedley's spoken about. It's why you invest in these things. It's why you take them forward, because of that commercialization potential.
Hedley, I'm coming to you now. Now, Lion Selection Group is well known for their line selection clock and timing the commodities market. Rare earths isn't something that I've heard you talk about a lot over the past couple of years, though. So I'm wondering, do you sort of have a medium-term view on this unusual basket of commodities?
Yeah, definitely. Well, I think rare earths is something that as we move through the energy transition, which a lot of people in a lot of economies are talking about, rare earths play a huge part. So, there's an elevated demand for these things which emerges. But we also know that the market for rare earths currently is fairly well dominated by one economy, and that's China. There's a huge willingness in the West to move away from that. That's not something that'll happen in 2025, but when we wake up in 2035, what's that going to look like? And I think the rare earths market is going to be quite different. So if you want to be involved in the rare earths market, then I think there's no point starting with a small, crappy deposit. You need to have something which is going to be significant in that discussion. We look at how politics is ebbing and flowing around the world. We look at how some of the friends of those politicians position themselves in business. I think rare earths are, particularly in a safe jurisdiction like Australia and a wonderful mining jurisdiction, really well positioned to benefit from that. But one example I'll give, Philippa mentioned before how complex offtakes, metallurgy and all that kind of stuff is. At the moment in the rare earths market, if you're just a miner of ore and you sell a concentrate, you have a share of the full margin that has to be shared between upgraders and then anyone who buys purified rare earths to put it into some kind of product and then sells that. You're capturing a small part of that. What we're seeing in America, in Australia, is upgrading plants are being funded with government debt and low-cost debt as governments say, let's get a portion of this upgrading happening here. So I can see, because of that is going to put a regional demand on concentrates and ores. And as Philippa says, the more of that you can provide, the better. So all of a sudden, I think the portion of that overall margin, which is going to be available to the owners of material in the ground, which is typically quite large for people who own resources, I think that increases for owners of rare earths deposits. So we see that as a really exciting future for rare earths, and that's one of the reasons we sought it.
Philippa, just coming back to you, where do you sit in this space?
I think Hedley's right. Our view is very much the same, that strategically rare earths is the right place to be for all of those reasons he's discussed. And where we're sitting, being in Australia, being so well located within a mining hub and all that commercialization potential that we've spoken about, we're very well positioned to deliver into that in future, assuming we can get through all of these steps, right? There's a long way to go, and these things do take a lot of time to progress. So it's understanding that timeline and working towards it in a strategic and very meaningful manner so that each of the steps that you take are foundational principles that you can build on. And most Western countries, like Australia, like the US, like the UK, actually don't have much technology because 50 years ago, this was all handed over to the Chinese. So we're all in the Western democracies in a learning phase. And our team has been incredibly focused on picking up the most competent people that we can. We have some very strategic people, some very strategic service providers. I'm being very cautious about mentioning who they are and protecting that IP, because we see incredible opportunities developing out of that knowledge and how we can leverage it for the benefit of our shareholders.
Hedley, my final question for you today, and that is, what is it about this part of the resources market that attracted Lion?
Well, I think it's its leverage to the future. People talk about mining booms, and you did ask the question before there. Every mining boom is a bit different in terms of its flavour and its size and what it's, centred on. And sometimes mining booms are really big because the whole of the global market leans into commodities. The boom that we've just had that took place from about 2016 through to 22 didn't have a lot of the world market leaning in. It was just, the mining sector, shares going up according to commodity patterns, but earnings multiples for mining companies were tiny, and that's because it's a boom that really didn't have a big story to it. The one before that was the emergence of China. So I think about how does the whole market lean into a mining theme, and it's the energy transition. So that's what led us to what commodities are going to be taking a major role in the next cycle. People talk about copper. That's fairly obvious, I think. Copper's one which, there's a big market, supply is short, and for a big market, you need a lot of new supply. Rare earths is probably a specialty contributor to that, but it's absolutely essential in all of the things which these big economies are talking about in terms of energy generation and the rest. So that is the position in the market that we're most interested in.
Philippa, before we wrap up, do you have anything to add to that?
No, I mean, really interesting conversation, and wonderful to have a shareholder come on board and have that perspective of the company as well as the investor coming into it. I think it's a useful conversation, talking about things rather than just standard ASX releases, right? These are the things we have to consider strategically all the time. It's why we're here. They are the drivers behind what makes investments and progressing these assets possible. So thanks for hosting the conversation, Shae. Hedley, thanks for joining us. I'm delighted to have you all on board.
Thank you very much, Philippa, for inviting me on. And look, one final comment here is the world seems to have forgotten a bit about critical materials. I think now is a tremendous time to be contrarian about this. So, everything has its moment and it happens cyclically. So, to have a very well-established holding in something which is a massive critical deposit, I think now is a great time to be accumulating that kind of an exposure. So, for people who are watching and wondering, now's time to have a good look.
And that would be ASX CRI.
What an excellent place to leave today's conversation. Thank you both so much for being here.
Good on you, Shae.
Thanks, Shae.